And for our questions, we're going to really start off, looking high level and talking about the U.S. economy. We've seen a pretty strong GDP growth this year. The third quarter GDP growth was, I believe, just under 5%. But we've also seen things like a softening labor market. We've seen credit card balances start to tick up and delinquency rates rise also. So Jason, I'm going to pass the mic off to you for this first question and ask just, can you give us a sense from your perch what you're seeing and how the U.S. economy is doing right now?
Sure. Thanks, Liz. And thank you everyone for joining. As always, it's a pleasure to have this opportunity to talk to you today about the economy and markets and what's happening in our world. So to Liz's question about, how the U.S. economy is doing these days, just generally speaking, as Liz mentioned, the most recent top of the funnel data, that is third quarter U.S. GDP, came in at around 4.9% annualized, underpinned by a strong, fully employed consumer who spent freely in the summer across travel, out at restaurants, Taylor Swift concerts, and even some retail splurges. Enduring large amounts of fiscal spending has also been an economic propellant that many underestimated. This is a robust pace of growth. There's no question about it. It's the highest growth rate for any single quarter going back to 2021, which was a big year for growth, the biggest year for growth since 1984. But this speed will be hard to sustain. And we see a more challenged environment ahead for the consumer. For the US economy, the old adage goes, get the consumer right and get the economy right. So the direction of household spending will be key.
Thanks, Jason. And anybody else on the panel want to chime in with thoughts on the U.S. economy before we sort of dive a little bit deeper? Doug, I see you turning your camera on. I want to give you a chance to share your thoughts as well.
Thanks. Actually, I just was turning on my camera. It's like when you're in an auction and you accidentally, scratch your ear and you accidentally created a bid. But I always have something to share, and I'll just point out that it's so hard to predict what the market is going to be. If a year ago people had asked us, where do we think the market is going to be? 18. If we had said just under 20% by the middle of November, I think a lot of people would have thought we were crazy, right? So that's why it's so important to have our long-term allocation that Albion stresses and to stick to that, because while it seems obvious in hindsight when bad things happen that the market was going to go down, oftentimes the opposite happens as well. So that's my comment, Liz.
Yeah, Liz, I'd like to make an observation that, as Jason just highlighted, the economy's in great shape. It's actually doing very well, but you wouldn't know it if, depending on what you read and where you get your information. While the underlying numbers and the economic strength is really quite positive, boy, there's a lot of bearish sentiment and negative sentiment that's easy to see in the press. And yet what we have to do is get past that and actually look at the information, treat it as scientists, if you will, to see what's really happening. So it's very important to try to separate in your mind some of the things that you read, that a lot of hand-wringing going on with, and compare it to what is the actual data showing us. What the data is showing us is economy is quite strong.